Hey everyone, and welcome back to the channel, your go-to source for understanding the complex world of market mechanics and potential opportunities. Today, we're diving deep into a fascinating stock that has popped up on our hard-to-borrow screen at AZI Internet Technology Global Limited, ticker AZI. We're going to break down exactly what makes this stock intriguing from a short squeeze perspective, what the numbers mean, and what you need to understand as a potential investor. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Let's get straight into it. AZI Internet Technology Global Limited, or AZI, is a company operating in the consumer cyclical sector, specifically within auto and truck dealerships. Based in the People's Republic of China, AZI, together with its subsidiaries, provides automotive products and services through both online and offline channels. This includes selling new cars, auto parts, accessories, and even offering automotive insurance-related services. Currently, this company has a market cap of approximately $4.01 million. Looking at its recent price action, AZI has seen a notable shift. Today, the stock is down minus 12.34%, and over the last 5 trading days, it's experienced a minus 20.12% drop. However, if we zoom out to the last 30 days, AZI is still up a respectable plus 17.39%, suggesting a recent pullback from high levels. Show chart, AZI price action with 1-day, 5-day, 30-day markers. When we look at volume, today's trading volume for AZI sits at 132,900 shares, which is significantly lower than its 30-day average volume of 12,679,810 shares. In fact, its relative volume today is Xerox its average a very quiet day, despite what we are about to discuss. What's cost to borrow and why it matters? Before we get deeper into AZI, let's quickly cover a fundamental concept, cost to borrow, or CTB. Should text overlay, cost to borrow, CTB. When you short stock, you're essentially borrowing shares from a broker and selling them, hoping to buy them back later at a lower price to return to the lender. Brokers charge a fee for this loan, which is the cost to borrow. This fee is typically expressed as an annualized percentage. Think of it like interest on a loan. A stock is considered hard to borrow when there are very few shares available to short. When demand to short a stock is high, but the supply of shares available to lend is low, the cost to borrow skyrockets. These fees can easily exceed 100% or even several 100% annualized. Why does this matter? Because an extremely high cost to borrow is a strong indicator of intense short interest and a shrinking supply of shares, both of which are critical ingredients for a potential short squeeze. Why the stock is hard to borrow right now. Now let's apply this to AZI Internet Technology. AZI has appeared on our hard-to-borrow screener because its cost-to-borrow fee is an astonishing 570.8% annualized. Highlight, 570.8% annualized CTB. While the cost-to-borrow momentum has actually decreased by 73 percentage points over the last 5 trading days, meaning it was even higher recently, 570.8% is still an incredibly high figure, indicating significant pressure on those holding short positions. To put this in perspective, imagine paying over half the stock's value every year just to hold a short position. Furthermore, the shares currently available to borrow for AZI are incredibly scarce, standing at just 100,000 shares. When you consider the estimated float for AZI is 4.4 million shares, having only 100,000 available to borrow highlights just how tight the supply is. Our internal composite squeeze score for AZI, which combines factors like CTB, borrow supply, float, and price momentum, currently sits at 52.0 on our 0-100 scale, a moderate but noteworthy score. Squeeze mechanics explained. So, what is a short squeeze and how does it happen? Imagine you borrowed and sold AZI shares, betting its price will fall. But what if the price starts to rise instead? As the stock climbs, your losses grow. If the price continues to rise, short sellers face margin calls from their brokers, forcing them to either deposit more capital or, crucially, buy back the shares they borrowed to close their position. With very few shares available to borrow, and the cost to borrow so high, this buying pressure can intensify dramatically. When many short sellers are forced to buy back shares simultaneously in a low supply environment, it creates a powerful upward spiral, driving the price even higher. That's a short squeeze. It's important to remember, though, that a high cost to borrow for AZI does not guarantee a squeeze. It can also indicate that short sellers have strong conviction in their bearish thesis and are willing to pay a premium to maintain their positions. Dilution risk check. When evaluating any potential short squeeze candidate, dilution risk is absolutely critical. Dilution occurs when a company issues new shares, which increases the total number of shares outstanding and can devalue existing shares. This can be devastating for a short squeeze thesis because it provides more shares to the market, which can be used by short sellers to cover their positions or simply offset any upward price momentum caused by short covering. For AZI, we've conducted our checks. No recent dilutive SEC filings such as SMINUS-1, SMINUS-3, or 424B have been found in the last 90 days. Additionally, there have been no recent reverse splits for AZI in our look-back window, which can sometimes precede dilution. This absence of recent dilutive events is a positive sign for AZI in the context of a potential squeeze. Important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Given AZI current setup, here's what astute traders might watch for. First, keep a close eye on the shares available to borrow. Any further decrease from the current 100,000 would indicate even greater scarcity. Second, monitor the cost to borrow. If it begins to rise again after its recent slight decrease, that could signal renewed demand to short and increase pressure. Third, trading volume is crucial. Remember, AZI volume today was Xerox's average. A significant increase in trading volume, especially coinciding with positive price movement, would be a strong indicator of growing interest and potential short covering. Finally, watch for any shifts in price momentum that could signal a turnaround from the recent minus 12.34% today and minus 20.12% over the last 5 days. AZI Internet Technology Global Limited, AZI, presents a fascinating case with its extremely high cost to borrow of 570.8% annualized and very limited borrowable shares. While the recent price action has been downwards, and volume today was very low, the underlying hard-to-borrow metrics are definitely noteworthy. Remember, understanding these mechanics is key to navigating the markets responsibly. Always conduct your own thorough due diligence before considering any investment. If you found this breakdown helpful, please smash that like button, subscribe for more in-depth market analysis, and let us know in the comments below what other stocks you'd like us to analyze. We love hearing from you. Thanks for watching, and we'll see you in the next one.